You use a more emotive language than I'm comfortable with.
So then, as I realized what a pathological liar Elon Musk is, and the fraud compounded. I mean, 2016 and 2017.
Do you think it's a fraud? It's emotional language. We just have to be emotionally in control. We have to be ambivalent. You shorted something which went up 20x.
Yes.
There's no glory from that. I mean,
looking for glory. I thought I'm fundamental position.
It tells you that you were horribly wrong. Anything is better than being short something that goes up 20-fold. I mean, that's just an obvious, self-evident truth.
Are you incapable of judging whether somebody is lying unless he's been proven in court to be lying?
Revenues were how much? Again, this is where I am. I mean, just tell me, revenues were what?
Well, earnings were about $4 ballpark. I don't know.
No. So again, let's think about just the reward. The total sales of Tesla were how much?
I don't remember. I can look it up. But it's...
Hold on a second. You've been short Tesla, and I ask you what the revenues were last year, and you don't know.
Explain to you why it's irrelevant?
Please.
You
can try.
In this video, a lesson in how not to invest and why emotions are the enemy of clear, rational, logical thought. A viewer tipped me off to this great interview between a big brain investor and an investor. Let's just be polite. This investor is currently short Tesla stock and has been for literally an entire decade. Oh, and he's also currently long legacy automotive stocks. I shit you not. As always, there's a link in the description to the entire interview, which I highly recommend you guys and girls all watch. For now, I'll be focusing on a few highlights from one of the dimmest, most deluded Tesla short sellers on planet Earth. It's nothing personal, but I'm not going to beat around the bush here. The lesson is simple. Don't be this guy. Unless, of course, you have a fetish for destroying your capital along with your reputation. This is really hard to watch, and hopefully this guy's friends and or family can stage an intervention, but until then, I have some thoughts. Actually, I have a lot of thoughts. I've shared almost 300 of them exclusively over on Patreon, so if you're not a member, you're definitely missing out. You can join with the card in the corner or the link at the pinned comment. This also includes access to my up-to-date Tesla price targets out over the next decade, and optional access to my Tesla valuation model, which no doubt would cause the subject of today's video to have an absolute heart attack. So if you want more content, a lot of it, head over to Patreon now. And by the way, yesterday's exclusive Patreon video had a very similar subject to today's YouTube video.
You started 1%, which is fine. You were cognizant of perhaps the trending dynamic, but you took it to 10. I mean, just give me some of the points in that journey. So it began, you said, in 2013.
Right.
So confirmation from Mark B.S. Pegel there that he's been short Tesla stock since 2013. A fucking decade. It's like if you keep punching yourself in the face repeatedly and going, ow, that hurts, ow, that hurts, ow, that hurts, I'm bruising, I'm cut, I'm bleeding, my face is swelling up. At some point, you might ask yourself, wait, if I keep punching myself in the face, it's going to keep hurting, isn't it? I'm going to keep bleeding, right? Maybe I should stop punching myself in the face. But a decade later, despite many of Mark's predictions not panning out very well, including the hilarious article on Seeking Alfalfa back in 2014 entitled, Why projections for Tesla to sell 500,000 vehicles in 2020 are absurd. Mark went on in that article to essentially say no one's ever grown this fast, therefore it's not going to fucking happen. If it did, it'd be amazing, but it definitely won't happen. Well, it did happen, but Mark's still here today in 2023 punching himself in the face. An entire decade, okay? I just have to say that one more time. The guy's been betting against Tesla stock since 2013. Just for context, I've been betting on Tesla stock since 2016. I was previously loading up on real estate, keeping an eye on the company, but I was a little bit skeptical, Model S, let's see if this thing is actually decent or not. Next minute, it's winning every award ever. Oh, okay, something in this. I began investing in Tesla just prior to their announcement of their next-gen vehicle, the Model 3. Clearly, Mark and I have had very different perspectives on this company and their future.
So the 1%, I wasn't thinking about the trend. I just didn't quite know the company well enough, and I hadn't found all the red flags, okay? But then as I realized what a pathological liar Elon Musk is, and the fraud compounded. I mean, 2016 and 2017.
Do you think it's a fraud? It's emotional language.
Boom, called out on the spot. Exactly, emotional language. The first clue that Mark Spiegel is not operating from a place of logic or reason, but instead emotions. Throwing out the pathological liar and then the fraud, which, as we know, is false. Elon's honest to a fault. Tesla stock's too high. We fucked up here, we fucked up there. This was dumb. I did something dumb. This was dumb as well. We did lots of dumb things. Dumb, dumb, dumb. Oh, here's a political opinion that's going to cause people to get triggered, butthurt, and mad, but I'm going to share it anyway because I'm honest and transparent. As I've mentioned in the past, I think one of the most common mistakes a lot of Tesla short sellers make is projecting their own personality onto Elon Musk. They see things that aren't there. Well, I'm a dishonest motherfucker. He must be too, right? Pathological liar. Now, I'm not saying Mark Spiegel is dishonest. I just am pointing out a trend I seem to have observed over time. You should see some of the stuff that the Tesla Q dolts say about this guy. I mean, literally. Go search online. You'll see all kinds of allegations from people about me that are literally untrue. Scammer, con artist, liar, what else? Oh, extreme alt-right. Oh, and a misogynist. Don't forget misogynist. Because, I like to point out that men and women are different. Oh, I'm a fraud, one of my favorites. And I've somehow managed to fool, manipulate, and trick. Let me just check here. 8,624 people to sign up to my Patreon account, pay me money every month, and continue to pay me money every month, and remain signed up to my Patreon account despite offering no value and having somehow swindled them and fooled them into signing up. When you hear these kind of allegations and assertions from people that run counter to reality, you have to ask yourself, what is going on in their head, if anything at all? It's totally fine to have an opinion, but if it's ill-founded and runs counter to reality, it's a very clear red flag that your cognitive faculties are not serving you. For example, I've got no qualms when people disagreeing with my opinions. That's totally fine. Although, in fairness, I don't really listen. I've never even watched a hater video, to be honest. I get sent links all the time. This motherfucker. I don't care. I'm not going to waste any time watching this stuff. But I get enough DMs where somebody sent a little screenshot of a title or this, that, or the other. Fraud, scammer, liar, con artist, blah, 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 blah. It's immediately a red flag because none of these things are true. Now, you could argue, this guy's a fucking idiot. He thinks Tesla's going to be worth this. He thinks they're going to sell 20 million vehicles. What a fucking dumbass. That's totally fine. But if you start saying things that are completely untrue, not attacking my thinking and my reasoning and my assumptions and so on, but instead just making stuff up, form of slander, emotive language, you lose absolutely all credibility. Really, it's not a good sign. And Mark is a classic example of this. We just heard him throw out pathological liar. Elon is anything but. And then claim that Tesla, the company, is a fraud. And this is an important clue early into this discussion, that Spiegel here is not operating from a place of logic and reason, but emotion. I'm glad Hugh called him out. And for the record, I'd never heard of Hugh prior to this moment, but I tell you what, after watching this interview, absolutely fucking love the guy. He has a gigantic brain, and unlike me, he's extremely polite in the way that he calls out BS.
I am not buying Tesla. I would be very wary of Tesla at these levels. I could imagine that Tesla could go all the way back to from whence it came. But we're just trying to engage in how difficult this business is, and how we just have to be emotionally in control and not become whatever, we have to be ambivalent. We can buy, we can sell, we can do nothing.
Now, clearly, Hugh and I have vastly differing opinions on Tesla stock. He's not touching it at these levels. I, of course, am touching it so much, I'll probably end up getting, I'm not going to finish that joke because too far. A couple of you might be able to fill in the blank. The point here, however, is Hugh, once again, is calling out Mark's emotive language. Despite the fact that Hugh is not a fan of Tesla stock, he obviously thinks it's either overvalued and or could collapse for other reasons. Yet despite that, once again reminding Mark that we must be logical and reasonable, not overcome by emotions. The key word there, ambivalent. Despite Mark having already been called out multiple times by Hugh here, who's not only perceptive but willing to say what's on his mind, I don't think Mark Spiegel has the self-awareness to accept this fact. But it's worth considering. When you're talking to somebody who's a handful of standard deviations beyond where you are, and they're calling you out very directly on your overly emotive language and reminding you that we need to be ambivalent. Put the emotions to the side. We need to be logical here. It's important. Otherwise, you can lose a lot of money, especially when you're shorting companies. We can't let emotions cloud our judgment. Despite this, I honestly don't think Mark Spiegel has the self-awareness to take this on board. Back to the old punching oneself in the face analogy.
So what are you on Mark's risk position? Are you 10% of your NAV?
For Tesla?
Yeah.
Well, I made it much bigger going into that earnings report, although I'm going to have to stop out a chunk of that, at the close.
Yes, you did hear correctly. He just must be a masochist, bro. He confirmed that he did go short Tesla stock leading into earnings, somewhere around, let's call it the 24th, the day before. Tesla stock, since earnings, up about 24%. No wonder he calls his fund Standstill Capital. Oh, wait, I don't think that's what he calls it, but he probably should. By the way, I believe Mark Spiegel is now teaching a course. I think the title is the Mark Spiegel School of Capital Destruction. So you guys make sure you sign up using wherever his link is, somewhere on his social media. I'm sure you'll learn how to make a lot of money for other people on the other side of the trade. I'm not trying to be mean. I just, it's important that you're open to feedback. If you make a decision and you get your face torn off financially, then you make the same decision, the same bet for the same reasons, and once again you get your face torn off. And in fact, if you've been doing this for an entire decade, it's really important to be able to take a step back and go, even though I believe I'm making the right decision, even though I believe I have good reasons to be making this decision, I now have a track record of an entire decade where I've been completely and utterly wrong with catastrophic financial ramifications. Maybe even though I still think I'm right, I should just sit the out of the market and stop punching myself in the face. But nope, guy doesn't learn. Oh, dude. Near 2-year lows. Goes short again leading into Tesla earnings, and the stock's up 20+% since. Mark, please, dude, just stop. I'm trying to help. Just stop. Sit on the sidelines for a couple of years. Please.
The reason I'm still in business having a short position that went 20x against us is I had no problem stopping out on the way up and, trying again $20 higher.
You shorted something which went up 20x.
Yes. And I'm still here to tell this.
Sure. But that's it's not my business. There's no glory from that. It
looking for glory. I thought I'm fundamental position. And
it tells you that you were horribly wrong.
Couldn't have said it better myself. Seriously, if you make a bet against a company, against a stock, and it moves 20x, you were completely and utterly wrong. However, given Mark's emotive language and his track record and his consistency, the last decade, still just punching himself in the face there, uppercut here, jab here, hook there. I have a funny feeling that Mark probably won't want to take responsibility or accountability for being wrong, and instead will have an excuse or a reason. It's not my fault. The stock market's just been wrong for an entire decade. Let's see what he's got to say.
About the fundamentals of the stock.
No. As a speculator, you were...
As a what?
As a speculator, as someone appointed... What? Of course you are. You're short. You're long. You're a speculator.
I decide what I think a company is worth, and if it's a short position, if it's worth a lot more, I bet against it. You can call that speculating. Look. There's trend following, which is fine, and then there's I don't let the chart.
The denial is strong with this one. Mark, we're all speculating. Everybody investing in securities is betting. It's speculation. We don't have time. We can't go into the future and know that's the whole point of investing. For example, I speculate that over the course of the next decade, Tesla's valuation will grow to be multiple trillions of dollars. And I'm betting on that. I could be wrong. An extinction-level asteroid could come and destroy all life on Earth. Obviously, I'd be wrong then because there's no more Tesla, there's no more humans. I could also be wrong if somehow I've misunderstood everything that I think that I know about Tesla. I believe the odds of that are almost zero, but they're non-zero, and I accept this. Investing is risky because we're speculating. We don't know the outcome ahead of time. It's interesting to see that Mark had a difficult time accepting the fact that he too is a speculator. He almost wanted to prove that's not true. I'm not speculating because I've done my numbers and I know this company's a fraud and Elon's a pathological liar. It's not speculation. This denialism, it's hard to watch. I feel bad for this guy. It's not thinking clearly.
I do use the chart for entry and exit points, but I don't let the chart tell me that, a $100 billion company is worth $5 billion or whatever. I'm making up numbers there. So,
yeah, of course,
there's two different philosophies in the market, right? There's a lot of ways to make money in the market. There's quants who trade by the millisecond, right?
Sure. We until there's a time machine and we can visit tomorrow today, you're a speculator. Regardless if you're looking at trends, you are doing a deep dive into fundamentals.
Okay,
you're
all right.
You're investing your opinion in an event which is yet to happen.
Okay.
So
I swear, I can see the physical pain on Hugh's face. Just watch. Now, of course, I could be wrong. Only Hugh knows what he was thinking. But just watch this guy's face, his mouth contort. Just watch his reaction to Mark just going on his little ramble.
A $100 billion company is worth $5 billion or whatever. I'm making up numbers there. So,
yeah, of course.
There's a lot of ways to make money in the market. There's quants who trade by the millisecond, right?
Sure. We until there's a time machine and we can visit tomorrow today, you're a speculator. Regardless if you're looking at trends, you are doing a deep dive into fundamentals.
Okay, all right.
You're investing your opinion in an event which is yet to happen.
Okay.
So, but you asked me a question, and I would try and answer it. So, anything is better than being short something that goes up 20-fold. I mean, that's just an obvious, self-evident truth.
This guy's a fucking savage. I mean, it's true, but the fact that he pointed it out, I love it. It's important, ladies and gentlemen, to call out BS when and where you hear it. I harbour a suspicion that Mark's inner circle are unwilling to call out his BS. Assuming he has an inner circle, that is. Either that or he's so deluded that he's just unwilling to take on board their feedback. Hey Mark, bro, you've been wrong for 10 years, surely. Can you just... Nope, I'm definitely going to be right this time. Fuck you. Your opinion is worthless. I'm right. The market's wrong. It's been wrong for 10 years. No feedback, thank you.
I'm going to pull up a chart. Give me a second.
Yeah, you should pull up.
A daily chart or a weekly chart?
I look at the maximum amount of data. You know, I don't want to get lost in the data.
Interesting exchange there. I don't want to read into it too much, but clearly Hugh, like myself, is a big fan of data, as in the maximum amount of it, rather than getting lost in the short-term noise. Interestingly, this is a recurring theme among many Tesla short sellers I've noticed. I read all the comments on YouTube, I read the comments on Twitter, and I often notice if Tesla's down for a single day or over a couple of days, the Tesla queues swarm in. You're fucking idiot, told you, bro, you fucking dumb you're losing it over this much, right? Of course, as I've mentioned, I have been investing in Tesla since the beginning of 2016. I invest with a multi-decade time horizon. Remember when everyone was panicking not too long ago, and I'm not going to name names, but there were people who panic sold Tesla stock near 2-year lows, freaking out, the world's ending. You guys remember back in 2020 around March, April, May when everyone thought the world was ending? And I said, it's not, and here's what's going to happen. Don't panic, opportunity abounds. We know how that one panned out too, right? With a long time horizon, I was able to cut through the noise and the panic. If you guys are curious, you can go fact check me, watch my videos. March, April, May, June 2020, watch exactly what I said would happen, and what did happen. The same has been true over the last 6 or so months as Tesla stock has continued to plunge further. I've been loading up with literally every spare cent. Many others have got too focused on the short term, overcome with emotion, panic, fear, uncertainty, and doubt. Made very poor decisions, locked in major losses in many cases, because they were getting caught up in the short-term noise.
Hold up a 5-year weekly chart. What year?
Yeah, I'm looking at 5 years. So
okay.
You know.
And now skipping ahead a little bit, and fair warning, ladies and gentlemen, make sure you're 1, sitting down, 2, have some popcorn, and 3, are absolutely not drinking beverages while watching this next clip, unless of course you want to create a new abstract artwork by spraying whatever you were drinking all over your computer, monitor, keyboard, and/or device. No, seriously.
Are you incapable of judging whether somebody is lying unless he's been proven in court to be lying? You don't...
Oh, the irony. I mean, this is real life. I mean, it almost looks like a deep fake. It's just too good to be true, but this actually happened. The guy who is actually incapable of determining whether or not somebody is honest, whether or not there's fraud being committed, the actual guy is literally asking Hugh, are you incapable of determining whether or not someone... I can't believe it. It's just... I can't. Just move on. I just can't. What a fucking idiot.
I mean, when the New York Times or when the Wall Street Journal broke the Elizabeth Holmes story, had all these witnesses who said, yeah, she faked all this data and it was fake data, and she gave it to Walgreens and said it was real data. You didn't say that's fraud. You said, oh, I'll wait to see if they bring her to court, and then a jury decides. I'm not capable of saying that somebody makes fake data and 6 witnesses corroborate it. I'm not going to call that fraud.
Yeah. Well, for me personally, my code of conduct, I'm not the first person that throws the stone. Okay. I have to, like, my P&L doesn't lie. Okay. My P&L doesn't lie. So for me, they're just things which don't lie. Okay. And I just have to believe in justice. Can justice get it wrong? Yes. But when all of the forces which are invested in justice do not bring those allegations forward, and there's been a considerable amount of time which has passed and they've not been brought forward.
Hugh's expression once again says it all. It's a great point, by the way. We notice a lot of logic and reason coming from Hugh, which seems to be encountering the blockade of emotion on Mark's end. Curious to see how he responds to this, because it's a fair point. Hey Mark, I mean, I understand your point. Occasionally the justice system may fuck up, but as a general rule, if you believe that there's a fraud and it's been ongoing for multiple years and yet the Justice Department hasn't got involved, is it possible, Mark, that perhaps the fraud you believe you see does not in fact exist? I mean, this is a fair question. Like you said, justice system isn't flawless, but wouldn't this be an interesting data point? I mean, Mark's been calling Elon Musk a fraud for years, calling Tesla a fraud for years. In fact, he's also been mocking and ridiculing Elon being on the autism spectrum by calling him Mr. Fraudsburgers, a combination of fraud and Asperger's. Like, really? Quality human being right there. How will Mark respond to this very reasonable question and comment from Hugh?
What if
I get closure on that?
What if you give big contributions to Congress people? What if I'm just throwing stuff out there. What if you own a satellite system that the Defense Department needs? What if you had a videotape of the Attorney General having sex with a dog? I'm just throwing stuff out there.
Whew, this guy really does not know how to read a room. Now, I say some pretty outlandish stuff here on YouTube on my own channel, with viewers full well having the expectations that I'm going to be obnoxious, arrogant, rude, over the top, hyperbolic, and a bit of a dick. In case you haven't noticed, it's a persona. Mark, on the other hand, seems to be unaware that he is a guest on someone else's YouTube channel and doesn't quite seem to understand how to read the room. Hugh hasn't been dropping F-bombs, he hasn't been making lewd comments, he certainly hasn't been mentioning bestiality. For Mark not to understand the context, you know what? The pieces are starting to add up. Zero emotional self-awareness, zero ability to read a room. Do you guys understand what just happened right there? Hugh's been nothing but polite. He has pushed back, but he's done so in a very polite way. You've got to be able to understand the tone. I mean, if you guys have seen interviews I've done on other channels, my messaging, my style, my persona adjusts accordingly. And I'm fucking autistic and I can read the room. Although, in fairness, even though Mark constantly ridicules and mocks Elon for being autistic, between you and I don't think the guy realizes 95% chance he's on the spectrum too. That's the ironic part. I think what I'm trying to say is this is definitely not the guy you invite to meet your parents.
And so they don't bring charges. Are you saying that it's not fraud just because he wasn't convicted by a jury, even though you've seen the evidence right in front of you? I mean...
well, but to my mind, you are judge and juror. I don't think we're going to agree on this. I think... But I do not like conversations where we call people frauds and bad people and attorney generals are having sex and we've got videos. That's not the world of asset capitalism. Now, right. I mean, that might be having sex with whatever is maybe my world in private, but this is all about trend. Well, quite, but it's just we've got a wonderful reality. I mean, we have this absurd reality where this, like you say, the stock attained a market capitalization of $1 trillion. Yeah. So what the revenues forgive me, the profits and the results just reported. So that'd be for the closure of calendar year 2022. Yeah. Revenues were how much? Again, this is where I am. I mean, just tell me, revenues were what?
Well, earnings were about $4 ballpark. I don't know.
No. So again, let's think about just the real world. The total sales of Tesla were how much?
I don't remember. I can look it up. But it's...
Hold on a second. You've been short Tesla, and I ask you what the revenues were last year, and you don't know.
Explain to you why it's irrelevant?
Please.
You
can try.
God damn it. This is just too perfect. You can't make this shit up. Actually happened. Mark Spiegel, who's been betting against Tesla for a decade, is still betting against Tesla. Increased his bet against Tesla leading into earnings. And now after earnings, since the stock surged 20+%, he's saying he may need to close out or at least trim down that short position. Didn't even pay enough attention to Tesla's most recent earnings to know how much revenue the company did. Now, in fairness, I don't think revenue is the only metric that matters. In fact, it may not be the most important metric. But if you are betting against a company, not on a company, against a company, shorting that stock, you have the potential for literally unlimited losses. Unlike being long, where the worst it can collapse is back to zero, if you're short and the stock surges, you can literally lose an infinite amount of money. Therefore, you want to make quadruply sure that you know your fucking numbers in case something in your thesis has changed. Oh wait, that'd involve using your fucking brain and not being overcome by emotion, something Mark seems incapable of doing. Shout out once again to the 2014 article in which he claimed that projections for Tesla to sell 500,000 vehicles in 2020 were absurd. 2020 rolls around and they did actually sell those vehicles. Apparently that was no longer relevant to Mark. I don't know what he's focused on other than his hatred of Elon Musk. I don't know, maybe he sees the potential father figure in Elon that he didn't have at home. I don't know what the deal is there, but this is actually really hilarious. He doesn't even know Tesla revenue in the last quarter. He's still betting against the company. Potentially unlimited losses. You'd think that's a data point you'd probably want to know, even at least in the vicinity. I think Mark has just exposed himself as being a purely emotional investor who doesn't know any of the numbers at all. Just all emotion. Or maybe I'm misinterpreting this, by the way. Oh, God damn it. Hugh's response to this. Mark's like, can I tell you why this is irrelevant? Hugh's like, yeah, you can try. Let's watch that again.
The total sales of Tesla were how much?
I don't remember. I can look it up. But it's
Hold on a second. You've been short Tesla, and I ask you what the revenues were last year, and you
can I
don't know.
explain to you why it's irrelevant?
Please.
They
You can try.
I know what the earnings were, and I know that they just slashed prices to the point where the earnings get slashed terribly. Okay, car companies don't. I'll tell you this: car companies trade on half a turn of revenue, and Tesla's a multiple of revenue. I'm much more interested in the earnings than the revenue.
Again, what's up? I'm philosophically the other side of you. Like, earnings are just an abstraction. Okay, the one thing you
want to talk about free cash flow?
I just the one thing which is not an abstraction is you sell a widget, you sell it for a price, you do it for a year, and you have revenue. Okay, and
you sell it at a loss.
The first staging point is, let's just determine how many of those widgets did you sell and at what price, and let's have the revenue.
I like
you don't
chase and see if you're making money selling widgets. To me, that's more.
How can you not? I mean, now I've got to look it up. How can you not know Tesla's revenue from last year?
Because what matters is the margins and the earnings to me, not the revenue. When you
well, okay.
Do you spend revenue if you own a company and go to the store to buy a house or groceries or whatever, or do you spend the earnings?
So obviously I don't pay for anything, so I'm only looking at 2021's revenues, which were $54 billion. I imagine revenues, what would you imagine? Revenues last year grew at, year over year, they were up how much?
I don't know, probably 25%, 30%, something like that.
Okay. So maybe revenues are 65 billion. And the market capitalization today is how much?
3.2 billion shares times 175 as we speak.
So 3.2 times 175, 300. So we're talking about, let's call it $550 billion market capitalization. So,
okay. Yeah. Okay.
Yeah. Okay. Cool. Okay. And so we're saying, and I don't think it's substantial debt or net cash. So we'll kind of just keep it price to sales.
There's some net debt, but it's in China. It's hard to get to. Go ahead.
Okay. Yeah. So we're talking about it being almost 10 times historic sales and maybe falling to 8 times revenue. And you know, and that is the flag, because you know we know that automobile companies struggle to earn operating margins greater than 5%.
So just in case you missed it, Hugh there just pointed out that we know, as in industry experts know, that typically automotive companies struggle to have an operating margin of 5%. If anyone is curious, and even if you're not too fucking bad, because we're looking at it, anyone want to take a guess at Tesla's operating margin in 2022, or let's say just Q4 2022? Spoiler alert, 16.8% for the full year 2022, and 16% in Q4. If you suck at math, Tesla's operating margin is already 3 times that of what the automotive industry would be super happy to achieve at around 5% operating margin. This is one of those moments where you go, if the automotive industry struggles to hit 5% and Tesla's already at over 16% at a relatively small scale, and that's trending higher, should we be valuing Tesla as an automotive company? And now for the final act of self-immolation, Mark explains he's actually long a number of legacy automotive manufacturers. So just to recap, not only has this guy been short Tesla stock for a decade and wrong about Tesla stock for a decade, wrong about the trend of EV adoption, and wrong about how the stock market will value an EV company, he's doubling down on that by simultaneously betting on the legacy automotive manufacturers who are currently struggling in a desperate and futile attempt to somewhat catch up to Tesla as they force the entire world to move towards EVs. You know what? With this guy's track record, I wouldn't be surprised to learn he'd shorted Amazon stock back in 2015. I'm just kidding, I can't do that. That was mean. I mean, it's true. He did actually announce on Twitter that he was going short Amazon in 2015. Don't look up the stock price in 2015. Don't look it up now. It's not like this guy has a track record of being wrong about just about everything. So let's hear what he's got to say about why he's long a bunch of legacy automotive manufacturers. I'll try not to interrupt too much on this.
Tell me something you really like and why you really like it today in today's market.
On the long side, obviously.
Yeah.
So I'm long big auto, traditional auto. I'm long Volkswagen. I'm long big position in Volkswagen, big position in Stellantis, smaller position in General Motors. I'll talk about Volkswagen first because you can look at it a few ways. One way you can look at it is it's selling at around 4 times earnings. Okay. And people would say, well, those were peak earnings, but they weren't because all these car companies could have sold 20% more cars than they sold. They had supply chain problems. So they were really sort of like strong mid-cycle earnings that I'm working off of, not peak, never gets better earnings. And, I think the multiple on that should be 8x or 9x, or maybe 10x, not 4x. The other way to look at Volkswagen is, this, and here's an interesting way, and this is sort of classic value, okay? Volkswagen owns 75% of Porsche, okay? Porsche's market cap, I'm not looking today, a few days ago, was about $95 billion, ballpark, okay? If you just subtracted the Porsche ownership from Volkswagen's market cap, you got all of Volkswagen, and again, these numbers are stale by a week or so. You got all of Volkswagen for about $2 billion, all right? What are you getting there? You get Audi, probably worth 30 or 40 billion. You get Skoda, you get the Volkswagen brand itself, Golfs and Jettas and all that stuff. Point is, it's an incredible sort of sum of the parts value deal. That's why that's my single largest long position. So cheap on earnings, cheap on this giant Porsche ownership. And by the way, the Porsche valuation is not crazy. Again, going back to last time I looked a week or two ago, Porsche is selling for around 15 times earnings, but it's got phenomenal margins, like by far the highest margins in the auto industry, other than maybe Ferrari. So
Mark rightly points out that Porsche has great margins, give or take around 30%. The only automotive company with better margins is Ferrari. Fancy that. You sell $500,000 vehicles, you make a bit more money on them. But this is where the cognitive dissonance, emotions clouding one's judgment, and or evidence of the Dunning-Kruger effect really come to the fore. On screen now, Tesla gross automotive margins over the last 5 quarters. Q4 2021, over 30%. Q1 2022, over 30%. Remember, Tesla did have to massively jack up their prices, so their margins were a little bit inflated temporarily. Elon himself said their prices were embarrassing. Let's continue. Q2 2022, gross automotive margin 27.9%, Q3 27.9%, and Q4 after recent price cuts. Oh, and by the way, 2 massive new factories ramping up, also dragging on margins, 25.9% for an average gross automotive margin over the last 5 quarters of 29.04%, basically 30%. Now, of course, Mark would argue, well, their margins are going to collapse, their prices have to come down, there's no demand, they're going to get worse, and I would argue over the long term, Tesla's margins will probably float around that 30, 35, maybe even 40% range. Come back in a few years' time and let's see what happened. Point is, Tesla's margins over the last 5 quarters are effectively 30%. Porsche's margins, according to Mark, are about 30%. Isn't it curious that Mark failed to mention that Tesla's margins were equivalent to Porsche's margins? It's a weird thing to forget to mention, especially when you're explaining why Porsche has such an extremely tantalizing valuation due to their very high gross automotive margins.
That's a compelling case. Stellantis is compelling because, again, it's selling, or it was last time I looked, at less than 3 times 2022 earnings, which, as I said, estimated. They didn't report yet, which were not peak earnings.
Right.
Pick those, and that's fine.
Hold on. Again, let me just.
Hugh's cracking me up here. This guy's an absolute legend. Every time Mark BS Pegel spews a little bit of BS, he gets called out. This may be the first time Mark has ever spoken to somebody and got any pushback whatsoever, instead of the usual experience in which he and a bunch of others in the Tesla Q echo chamber just sit around and jerk each other off. Respect to Hugh for calling Mark out. Respect to Hugh for doing so in a relatively polite way. Let's see how Mark responds.
I detest price earnings ratio. It's just such an amateur. For me, no, I don't mean for you, but it just is such an opportunity to make mistakes when you go down the rabbit hole of price earnings. I don't know any major hedge fund
You could look at
manager.
cash flow. It's cheap on those multiples.
Yeah, I mean, tell me anything but
Okay.
bloody price earnings ratio. It is.
Well, they're cheap. I don't know the
You
numbers.
sound like a Wall Street journalist or something, or like a Financial Times journalist. We don't talk about price earnings ratios.
This is turning out to be an all-time classic interaction.
Secondly, let's really Porsche is a good valuation. I've got a good.
Hey, if I may interrupt for 1 second,
Please, yeah.
I know many billionaire investors, including one who's one of my LPs, who talks about price earnings ratios all the time. So, value investors. But go ahead. I didn't mean to interrupt.
No, you're quite right.
What's the saying? A facial expression is worth 1,000 words or something like that. Take another look at Hugh's non-verbal communication as he says, yeah, you're right. I think his face says something different.
Quite right. Any idea of Porsche's market cap?
Yeah, I think last I looked, it was about 95 billion. I'll tell you right now. Hold on a second. The symbol is very easy, by the way. The symbol is 911. .t, I think. Wait, what? That's the wrong one. All right. Sorry, hold on a second. 911.de. At least on this thing. So the market cap is was about 95 billion euros the last time I got.
Okay, and it does revenues of about 100 billion. Yeah.
Hold on a second. Hold on. It's 106.2, and I think they actually made, if I remember right, 911 million shares outstanding. They really played up the 911. Yeah, it's about 97 billion euros, if this is right, ballpark. So yeah.
And we don't know the debt, but we're going to say it's on 1 times revenue. And okay. I think if we looked at Toyota, I think we'd find it's maybe on about 0.3 or 0.4 times revenue.
Huge margin difference. Porsche,
huge margin difference.
Porsche net margins, I think, are close to 30%. Do you ever, just for fun, I don't know if you're a car guy, do you ever price out a Porsche online? What they get for the options, and people option these things up? It's just ridiculous.
Very much. But am I not also right in saying that revenues for Porsche have been pretty much 100 billion for the last 3-4 years?
Don't know. I can look. I don't know.
Translation? But Mark, correct me if I'm wrong, but Porsche isn't growing, right, Mark? They're not growing at all, Mark. They're not growing, right? So they're not growing, but you're investing in the stock. But the company's not growing. They're in stasis. But you're long What?
The only other thing I'm long is a tiny micro cap, which I don't really like to talk about in public because I don't want to steer people with $30 billion company. Okay. And then GM. But that's all I'm long.
Fuck me. This hurts. It hurts. It physically hurts me to watch this. He's long GM, as in Government Motors, as in you did it, Mary, you misled and it matters. This is like walking into an open home, thinking about buying a house. It's literally on fucking fire and you go, geez, it's got great potential, yes. I don't know why anyone's not interested in this. The price is so cheap. It's a great home, great location. I mean, it's a bit warm in here and I guess those flames aren't to everyone's aesthetic taste, but yeah, it's definitely cheap. I mean, I don't know why other people don't see what I see. It's great value, this raging inferno that is currently a house and soon will be a pile of ashes. Here, let me make you an unconditional offer right now.
Oh, GM.
I'm long gold. You want to talk about gold?
Let's just do GM for a second.
Okay.
Because GM, I know, is the stock. The car business is defunct. It just doesn't work.
Why do you say that? I mean, what do you mean by off billions of dollars in free cash flow? So how do you define defunct? I mean, there's some multiple worth paying for free cash flow, right? Assuming it's not a, what's the word? A cigar butt company. It's not going out of business,
Man, I'm really struggling here. I mean, I don't want to kick a guy when he's down, but we do just need to discuss what just happened. Mark Spiegel literally just said, when referring to GM who are going out of business, well, I mean, it's not like they're going out of business or anything. Mark, they are going out of business. Bro, they're going to be bankrupt before the end of the decade. That's why it's so cheap. Someone needs to stage an intervention. He's long the Titanic. The Titanic has already struck an iceberg. It's already halfway toward the bottom of the ocean floor. And Mark, it's not like the ship's sinking and it's not like I'm drowning or anything. No, Mark, it is sinking and you are drowning and this will not age well. I can understand making 1 or 2 mistakes here, but to not see the writing on the wall, to not understand the EV, oh man, dude. I'm lost for words. A rare occasion indeed.
At best, GM is a government bond.
Is a what?
And the price is a government bond. And and let's say interest rates don't change, GM's going to be the same price forever. my crappy system's only giving me a price of GM back until 2010. It's the same price. You can tell me. I'm pretty sure that GM's trading at the same price it traded at the beginning of the century. Could you confirm that?
So, well, they went bankrupt, and so you're not getting the same GM. Oh, beginning of this century, 2010. I'm sorry, I'm dating.
No, well, no, you're right. You're right.
Not decade, actually. Yeah. No, GM's gone nowhere lately.
We just need to make a slight correction there. GM's gone nowhere since GM went bankrupt and got bailed out by the government for being fucking incompetent. Since bankruptcy, GM stock is officially up 10.77%. Give or take, best guess is probably not even half the rate of inflation, which really speaks volumes. Mark says GM's gone nowhere lately. Mark, GM's gone nowhere since they went bankrupt, which in and of itself is something to probably consider. Well, they went bankrupt, and since going bankrupt, they haven't actually gone anywhere. I think what we're seeing here with Mark B.S. Spiegel is a case of classic hopium. He's hoping that this stock that's done nothing for more than a decade is out of absolutely nowhere suddenly going to do something. The irony, of course, is that I'm often accused myself of being high on hopium, but I actually have some numbers behind my hopium. They're available in my Tesla valuation model. All of them. I mean, you can see every assumption behind my valuation and why I'm still investing in Tesla stock with every spare cent, and why I continue to believe that over time, they will print increasingly large amounts of cash, quarter after quarter after quarter after quarter. I'd love to see Mark's GM valuation model and his expectations for units, margins, etc. into the future, if he has one.
Here, so
which is testament to it being, again, this kind of ambivalent market that looks at things and has thousands of participants, and they all have different incentives, has decided that this is
I don't care if the market is ambivalent towards GM today. Okay, I see that as my opportunity.
Honestly, I don't. You've got to listen to the market at all times. So, Ford.
Okay, sorry.
Ford didn't go bankrupt. Okay, and Ford is trading at the same price it traded in 1988. Okay, it's telling you that as a business model, there are just much better things to do.
Well,
this is a hard way to make money.
I harbour a suspicion that Mark may in fact attempt to justify why Hugh's completely wrong and disregard the evidence that over the last more than a decade in the case of GM, the stock's gone nowhere, and Ford stock is still, the market cap is where it was in 1988 before half the people watching this video were even born. I have a sneaking suspicion that Mark, rather than saying, you know what Hugh, you might actually have a point. This is a pretty big bet, a low probability bet, that out of absolutely nowhere suddenly, despite multiple decades of history that the automotive industry isn't exactly a great business in terms of A, making profits sustainably over time, B, not going bankrupt, and C, accruing value to shareholders. Despite the evidence you've presented to me, I just don't think Mark will be capable of accepting this reality. It's just, again, I almost feel as if he's investing in these legacy automotive companies just because he hates Elon Musk, aka himself, but projects it outwards. Now, it could be wrong, but Hugh's got a point. Of all the places you could be investing, bro, is the automotive business really the place? Oh, God, this is so hard to watch. It's so painful.
First of all, you have to catch the cycle, okay? So Ford traded at $25 a share in January of last year, okay?
Yeah.
I would have been a seller there. I'm not a short. I'm not going to short it, but I would have, if I owned it, I would have sold it, okay? Now, I don't own Ford here. It's a little pricier than the others, but basically, it would have been a double if you bought it in April of 21, right? I'm not saying you own these things forever. I'm saying you trade them. Right now, they're too cheap for the cycle. That's what I'm saying.
Well, I mean, all I'm saying is, with stocks like that, there is, let's make this number up. There's 1,000 price observations, and there's only 25 observations that are the difference between losing money and making money. And so the idea that you're going to consistently find and land on those 25 price points out of 1,000, kind of a flag. It's a challenge.
You have to understand why people are only willing to pay today, $38 a share for General Motors. Okay, and I understand why. Okay, I mean, I understand. And I think they're wrong, and that's why I own it. Now, I'm not buying more at 38. I'll buy more at 30. But And I gave you one reason. Now I'll repeat it. People are like, oh, it's coming off the cycle. Everything's going to suck from here on. And I point out to them, no, if it were a normal cycle, they would have made a lot more money than they did. They didn't have inventory. Okay. And the second thing I'll point out, the other thing is, Tesla's going to put all these guys out of business. And I'm going to point out that, they have this deal with LG and they're building battery factories and they have a whole platform and they're going to, start selling hundreds of thousands, if not millions of electric cars a year pretty soon. And they're going to collect, speaking of government, they're going to collect, big, fat, stupid government subsidies on all the batteries that they make.
This may in fact be the first reasonable thing Mark has said in the entire discussion. Not only is it true that they will collect these incentives once they start producing their own batteries if they can get there before going bankrupt, but two, they are actually stupid incentives, and as I've explained in the past, the reason they are stupid is because they are completely unnecessary. EVs are already a commercial inevitability. As a Tesla investor, I'll take the incentives, but the government is pissing away money. You have to understand, when I say a commercial inevitability, words matter, and those are the correct words to describe the situation. EVs are almost, today, at price parity with comparable ICE vehicles. Not quite there yet, but almost. And the prices are continuing to decline precipitously over time. If your brain works, and you can look into the future, even just a few years into the future, assuming the prices of these things continue to decline over time, which they are as they scale up, lots of innovation still to happen in terms of batteries, manufacturing, and EVs in general. If you use your brain and think, you will conclude that in the future, in the not too distant future, EVs will actually be cheaper to purchase than a comparable ICE vehicle. And guess what? A few years after that, they'll be much cheaper. And we already know today the total cost of ownership, when you factor in fuel, maintenance, recharging, etc. It is significantly cheaper. Hertz themselves have said that the cost for their Tesla vehicles in terms of maintenance is less than half that of ICE vehicles in their fleet. This is why I say it is a commercial inevitability, because as more EVs are produced globally, there will be new innovations in manufacturing, further improvement in lithium-ion batteries, new manufacturing techniques. Remember, EVs have so few moving parts compared to an ICE vehicle that net, you don't need to be Einstein to figure out that over the longer term, when EVs have had time to scale up and be produced at volume, much like ICE vehicles have for the last century and a bit, given that they need far fewer things that go in them in the first place, ultimately they'll be much cheaper to make. And given the fact that already today, consumers want more EVs than there are available to buy. Even crap EVs are selling like hotcakes. There's no need for government incentives to force people to buy these things. It will happen anyway. The marketplace will decide this. This is how capitalism works. This is a disruptive, innovative, and much better technology. It drives me bananas to see governments pissing away such absurd amounts of money. Again, like I said, I own Tesla stock. The more money that's getting thrown at Tesla that they don't need, the better. I'm just pointing out that it is actually stupid to have these incentives. I agreed with Mark. Twice. In the span of a few seconds. I'm stunned.
And their customers are going to collect big, fat, stupid government tax credits for buying their cars, and the stock's going to go up. And I know the bearish case. My opinion, what I'm saying here is, if you understand why people don't want to own it, and you can put together a logical case as to why they're going to be wrong, that's when I buy it. That's all.
There's truth in what Mark said. Keyword if, you have a logical investment thesis, then maybe there's an opportunity. But in Mark's case, I think what he fails to recognize is he doesn't have a logical reason for investing in GM. He has an emotional reason for investing in GM. This ain't gonna age well.
You might run it to 50, and there's a risk that the recession which is coming takes it
50, 60. But the recession's priced in. Maybe not at 37, but at 30, the recession will be priced in. And I don't think GM is 10x. Okay, I think GM is 2x, and probably not 2x from 37. I think it's 0.7 or 0.8x from this price, which is also good upside. I'm not deluded.
No, I am. So my life, I took on Warren Buffett's advice. I'm a sloth. You're hyperactive.
Warren Buffett owns GM.
Warren Buffett doesn't own anything now. He's an old man with people who do things,
Right,
but
people.
I don't want to have to make the number of decisions that you volunteer to make. And that's the difference. And that's just personal difference.
This is a super important point. In fact, I have literally discussed this very topic, reacting to Warren Buffett's advice around making decisions when it comes to investing. The hole punch analogy. The more decisions one makes, By default, the more wrong decisions one will make over the course of time. Unlike baseball, where if you miss 3 balls, you strike out, or I don't watch baseball, I think that's how it goes. Correct me if I'm wrong. In investing, you don't have to swing at every pitch. In fact, if you do swing at every pitch, you're probably a moron. Instead, you can wait. You can wait for the perfect ball and smack straight into the grandstand. In my entire lifetime, I've only ever made a few investment decisions. And the truth is, in terms of actually big, meaningful investment decisions, went hard on real estate in Sydney and Brisbane and absolutely cleaned up on those. Home run, 1 swing, 1 home run. Decent start. I next went all in on a financial business, quit my design career, moved horizontally into a brand new industry, and once again, it was a home run. I tell you this just to point out that I don't make decisions lightly, and when I do, I ensure that there's a high probability of success. Now, I'm never going to be perfect. In terms of major financial and life decisions, I spent years researching how to start investing, where do I begin, decided on real estate, cleaned up, more than double my money in less than 7 years. I'm just kidding, I'm more than 10x my money. I gotcha. By the way, that's actually true. Due to leverage in real estate, put in 70,000 Australian dollars, returned more than $1 million, like that. I've lost count of how much I've made on real estate now. Still own it all. Again, I'm a multi-decade investor, goes without saying. Once I finished accumulating real estate, I started loading up on Tesla stock. A year later, I purchased some Amazon and Google stock. The thinking there was they've got great potential as well over the next few years. I knew at the time that Tesla stock was super volatile, so I thought it makes a little bit of sense. These companies will probably do well over the long term. At some point, I can probably cash out, go back into Tesla, and that's exactly what happened. If you actually do enough thinking and you aren't hyperactive, you make fewer decisions, but better decisions. It's generally a good strategy. My decision to invest in real estate in Australia from 2010 to 2015 certainly paid off. My decision to invest in Tesla stock from 2016 till present certainly paid off. My decision to move from a graphic design job horizontally into an entirely new industry in a finance business also paid off. In fact, the first decision, real estate, made me financially independent. The second decision, the finance business, made me financially independent again. The third decision, while working in my finance business, I began investing in Tesla stock since 2016 at the beginning of the year. Well, we know how that's panned out so far as well. And I guess the last thing to discuss would be my YouTube career, which is a total failure. Anyway, the point is, I've basically swung 4 times and the ball's gone over the fence every time. I'm going to be wrong sometimes, don't get me wrong. The bigger the decision, the more at stake, the more I think, the less likely I am to swing unless I really think I can hit it over the fences. So far, this has worked out. Only 4 major financial decisions in my entire life. Some investment related and some business career related, which creates the fuel to further invest. So far, I'm batting, 1,000? 3,000? I don't know my baseball analogies that well. Doesn't mean I won't make mistakes in the future, but it does mean that I make very few decisions and I'm less likely to make catastrophic errors of judgment. Meanwhile, Mark here is like, I fucking hate Elon, so I'm going to buy legacy automotive stocks. That guy's a fraud and he's autistic. I'd rather do just a few things very well than a lot of things average at best and more likely rather poorly. But hey, that's just me. And just a quick caveat, because I know there'll be some haters. What about this? What about that? You're a fraud. Just want to be super clear. When I'm talking about these home runs, I'm talking about decisions that required a huge commitment of time and or energy and or capital. I've actually started a lot of businesses that you would suggest were failures because they didn't produce a huge amount of revenue and huge amount of profitability, or they took up too much time, I had to close them down. But none of these businesses were things that I actually committed a huge amount of time or energy to and zero capital whatsoever. Those few occasions in which I've seen a huge opportunity and I've gone all in, e.g. quitting my job as a designer, starting a finance business, I mean, that's a pretty big decision. Pouring every spare cent into Tesla stock for the last 6-7 years, creating, 1,000-ish videos in the last 3+ years. These are all-in commitments, and so far the all-in commitments have all been home runs. And again, I'm not saying this to brag. I'm just pointing out that I don't make many decisions, but when I do, when there's a lot on the line, I make sure that I've done my homework, I believe there's a clear path for success, and I've given myself the best possible chance for success.
I can make money just trading off a chart. I think it's too hard to get whipsawed.
No, I wouldn't. I heavens, that's not my message.
Oh, okay.
My message is that if you're left to your own imagination, and again, the conceit and the arrogance of believing you've seen tomorrow, and you're committing yourself, like so just now, you've committed yourself to Volkswagen. Volkswagen is trending lower, okay, and so it's impossible for me to own anything. My idea is not being confirmed by my peer group. I respect my peer group.
Okay.
When I have a great idea, I want to tell people. And if the people go, yeah, I'm like, oh, bugger, I missed something. And I sit on the sidelines. So for me, when I have a great idea, it has to be in synchrony with the trend. That's all I'm saying.
I listen, that's a good way to make money. And maybe it's the best way to make money. I don't care what the market thinks at any given time. I care what people think just to hear why I might be wrong.
Really, Mark? Well, I just so happen to be a person who thinks that you are wrong, and by thinks, I mean knows, and by knows, I mean no. I really do know. Mark, you were, are, and continue to be wrong about Tesla. I'm sure your financial results since 2013 betting against the stock would demonstrate that point to you. Apparently not. You are also wrong about betting on legacy automotive companies. They're all going to be going bankrupt later this decade. Maybe a few will merge, they'll be acquired, but at best, they'll limp forward into the next decade, a shadow of their former selves. You are certainly wrong that Elon Musk is a pathological liar, and absolutely wrong that Tesla commits fraud, but I'm also confident that you'll be unwilling to accept this feedback because I'm just an Elon D riding Tesla Kool-Aid drinking fanboy who can't see reality for what it is, as my own investing results demonstrate over time, and my predictions also demonstrate over time. I've been wrong about all my predictions over the last 3 years. That's why people watch the channel and go, damn dude, you were right again. It's also why my investments in Tesla stock since 2016 have gone down, and wait, they haven't. I think what I'm trying to say, Mark, is you're wrong about almost everything that matters, but I also don't think you're actually genuinely serious about listening to what other people have to say in case you might be wrong, because, Mark, you are wrong on all of these things. I got a funny feeling Mark will just continue to double down on these bets until he loses every last cent of his investors' capital. But hey, like I said, I'm just a Tesla fanboy, so what would I know?
And when I get long something, I do it with unless it's something, nutty like some gold where you just don't know what the hell it's worth. But on a company, when I get long something, I do it with a big margin for error, so I know I can't lose too much, right? And if I'm wrong and it goes down, assuming there's nothing wrong with the business, I will buy more. I don't stop out a long position if I understand the company and I understand the business and I've bought it really cheaply, okay? Different philosophies. I mean, Warren Buffett did it. He's the richest guy in the world. He was until until Elon Musk got rich.
I mean, it's different. You use a more emotive language than I'm comfortable with.
What a great place to wrap up. Hugh being very subtle there, but once again, hey Mark, your emotions are in control, buddy. You don't realize it, but you're not thinking clearly. Hence, Hugh very delicately suggesting that Mark uses a more emotive language than Hugh is comfortable with. Unfortunately, Mark just can't read the room. I don't think he's really understanding what's happening here. This whole discussion has been Hugh going, hey Mark, you sure you're thinking clearly here, bro? I mean, you seem to be a little bit emotional and fraud, pathological lie. Are you sure you really want to be betting these companies that have gone nowhere for a decade or 2.5, maybe even 3 decades? You sure that's a good idea, Mark? Mark, are you maybe making just a few too many investment decisions? I have to say, I do respect Mark's conviction and his willingness to disregard feedback from others. The only issue is, in this case, I think most of the feedback that Mark has probably received has been well-meaning and on point. He's just ignored it all. Like I said, I really do hope Mark's inner circle can stage an intervention, because if not, he's going to continue to vaporize his own money and that of his investors. And to wrap up today's video, which holy shit, give or take, getting close to an hour, damn, this really was painful, by the way. Mark is the classic example of hubris, arrogance, ignorance, and a severe lack of emotional intelligence. The guy actually thinks Elon Musk is a pathological liar. He actually believes Tesla is a fraud. He actually believes legacy automotive companies stand a chance competing with Tesla in the next decade. He just continues to double down on his bets, despite being slapped in the face for the last decade betting against Tesla. I'm just gonna be honest, I really do think the guy is beyond help. You should never give up on somebody, but I mean, the lesson, ladies and gentlemen, don't be Mark. I'm sure most people watching understand Tesla, understand the opportunity, but there's probably a few areas in your life in which you're Mark Spiegeling. You think something's true, you're adamant something's true, yet you are absolutely wrong. The question is, what are some false beliefs and assumptions you have? There's no doubt you have some. I mean, I've got plenty myself, I'm sure. The question is, how quickly can you discover and correct them? If we fail to reflect and self-analyze, we too can become the laughing stock of the investing world. And just finally, a massive shout out to Hugh here. What an absolute fucking legend. I'd never heard of this guy until I saw this interview. Someone sent me a link. I'm like, bruh, this guy's a fucking legend. I love it. Even though Hugh wouldn't touch Tesla stock with a 420 quadrillion foot pole, I think he's fascinating, insightful, very intelligent, has a great demeanor, is willing to call out BS but do so in a relatively respectful way, unlike me. And I hope that Hugh actually takes the time to speak to more people who are shorting Tesla stock, just to see what they're thinking or not. And if you appreciate this absolutely monstrous video, like I said, it was not easy to sit through. I've been resisting the urge to claw my eyeballs out the entire time. Head over to Patreon, you'll unlock over 280 exclusive videos, my Tesla stock price targets, and of course, you have optional access to my Tesla valuation model as well. So, see you over on Patreon, and PS, don't be Mark. Love ya.